Well, earnings season will always keep us on our toes. It's been an interesting couple days. Amazon just reported, and the stock was up about 5% today before closing bell. Once earnings reported, it popped originally up to 12%. It's up around 7-8% right now. I need to interrupt your scheduled program here to provide an update. So I made this video right when earnings came out, and I went through the whole thing. I was talking about how the stock was up, and it went from green to red. So I did update this video. I promise this video is going to give you a great snapshot of what's going on with Amazon and the future of the business. And I did update the reason why the stock went from green to red. So watch this video in its entirety. I promise you'll get a lot out of it. Enjoy. You can see Amazon. So EPS, Q1, GAAP EPS, 31 cents. That beat by 11 cents. Revenue of $127.4 billion. That's up about 9.5% year over year. It beat by $2.85 billion. Now, what's incredible about this, think about 20 years ago. Think about 25 years ago when Amazon was a bookseller in the late 1990s. To think that it would have one quarter where it brings in $127 billion of revenue, that's pretty astounding. So of course, these are mega cap tech companies that have trillion-dollar valuations. In fact, Amazon, it's sitting at about $1.15 trillion now. And last year it was actually under $1 trillion. So the stock lost about half of its value, 50% of its value from the top. And it's up now over 30% year to date in 2023. Now, one of the reasons this stock popped, and the reason I'm so excited about Amazon, I just did a video about Amazon Bedrock. So this is AWS AI. And even though there is some deceleration when you think of public cloud services in general, this is still growing at a 16% year over year, $21.4 billion. Now, that might not seem like a lot of growth, but when you look at the growth numbers and you look at the historic growth, it's growth on top of growth on top of growth. And with AWS, there's a lot of opportunity for cross-selling, especially when you think of the AI segment. They're really just getting started when you think of Bedrock. What's interesting here, international sales about 1% year over year to $29.1 billion. So that's a little bit weak. North America, 11% year over year at $76.9 billion. So Amazon's two cash cows, really Amazon Web Services has been its cash cow for many years. It's been the growth engine to allow them to burn cash to build out other parts of their business. But the other segment is advertising. You don't hear a lot about it, but $9.5 billion versus $9.1 billion. That's a pretty strong beat, $0.4 billion beat. And I mean, it's nearing half of AWS revenue. You know, $21.3 billion in AWS, $9.5 billion in advertising. So their advertising business has actually grown larger than YouTube's advertising business, and a lot of people just don't realize that. In fact, this is Alphabet Google right here. They reported earnings just a couple days ago, and their advertising revenue $6.69 billion, which was a beat versus $6.6 billion expected. But Amazon's advertising is like 30% larger at $9.5 billion. So don't sleep on Amazon just for AWS and advertising alone. For the second quarter, Amazon said revenue will be $127 billion to $133 billion. Analysts had called for $129.8 billion. So that's within range, but 127, of course, is a little bit light. Something to keep an eye on. This is from Andy Jassy, CEO. Our advertising business continues to deliver robust growth, largely due to our ongoing machine learning investments that help customers see relevant information when they engage with us, which in turn delivers unusually strong results for our brands. So Amazon is using machine learning and AI for Amazon Web Services as well as their advertising segments. Jassy said that while AWS continues to navigate more cautious spending from cloud customers, he believes there's much growth ahead, pointing to the company's investments in large language models. I'm telling you, there's a lot of opportunity for Bedrock over the coming years. I want to cover this specifically because it's important to note. So AWS rose by 16%. That's deceleration from previous quarter. That was 20%. So you got a 4% deceleration. Companies have been trimming their cloud spend in recent months amid a challenging economic environment. So prior to the rally, after hours, Amazon shares were up 31% for the year. So you're looking at over 35% year to date in 2023. The company is still dependent on AWS for profitability. Listen to this. The cloud cloud unit generated operating income of $5.1 billion in the quarter. So I've said this before, if I could just buy AWS as a stock, I certainly would. And I said it would be at least $80 a share, in my opinion, just for AWS as a standalone stock. But you can't buy AWS, you have to buy Amazon. And I do like the advertising segment. I think there are other opportunities for growth. It's just that they're not as exciting as maybe the AWS segment is, of course. Now, operating margin for AWS is at 24%. That's the narrowest it's been since 2017. So that is something to keep an eye on. AWS also said it would open a region of data centers in Malaysia. I'm going to look at a chart here in a few minutes and kind of tell you where I think the stock could go. Of course, it's run pretty hard, so you have to be careful, but I do want to show you a chart here. This is directly from Amazon website, investor relations, first quarter results. This just came out. I want to go through some of this with you. And remember, the earnings call is going to be starting here in a few minutes, so the stock could gyrate depending on what's said on that call. So operating cash flow increased 38%. This is positive news to $54.3 billion. Free cash flow improved as well. You can read through this if you want, pause your screen. But the good news is they're starting to turn a corner. And I think what you're seeing with these big cap tech companies, I'll get to it in a second. I'll go into more detail, but I think you're starting to see the market looking towards the future. And I will talk about this in a few minutes. So I'm going to go through a couple more highlights here. Then I'm going to give you my thoughts about the company and just where big cap tech is overall. And then we're going to look at a chart. So a good quote here from Jassy. I won't read the whole thing, but basically talking about there's a lot to like about the teams, especially with the uncertain economy right now. Continuing to improve the cost to serve in our fulfillment network while increasing the speed with which we get our products in the hands of our customers. Down here, we talk about AWS. So AWS, business navigates companies spending more cautiously in this macro environment. We continue to prioritize building long-term customer relationships, both by helping customers save money and enabling them to more easily leverage technologies like large language models and generative AI. With our uniquely cost-effective machine learning chips that we talked about on a video recently on the channel, make sure you go check that out if you have not seen it. It talks about Amazon, how they're building their own chips, and about their entire AI segment within AWS. So Bedrock, AI Code Companion, like Code Whisper, which we talked about on that video. We like the fundamentals we're seeing in AWS and believe there's much growth ahead, and I agree with this. Now, the highlights here are really long, and I'm not going to be able to read through all of them. There are a ton. You can go check it out on their website if you want. Talking about some of the fulfillment network items, launch reviews from Amazon. This is a big one. Acquired One Medical, a primary care organization offering 24/7 virtual care services and in-office visits across the U.S. So Amazon's expanding more into healthcare. We've covered that on the channel as well. If you're new here, make sure you subscribe to the channel and click that bell for notifications. For a limited time, One Medical is offering annual memberships to new customers at the discounted price of $144 for the first year. It's normally $199 a year, the equivalent of $12 a month. Talks about Prime Video and National Football League. There's a first ever Black Friday exclusive. Talks about Creed 3 setting box office records with MGM. Some podcasting awards. And this, I want to cover this. This is important. So Southwest Airlines selected AWS, Zurich Insurance Group, BBVA, Broadridge, S&P Global, multi-year strategic collaboration to expand the delivery of its advanced secure cloud-based services. More than 100,000 of S&P Global's government enterprise customers in 43 countries around the world. This one's big. So this one is big. Snowflake and AWS announced a new commitment to build joint industry-specific solutions, increase sales collaboration. Now, Snowflake is up after hours, as well as Datadog and several of the cloud names. The one exception is Cloudflare, and I haven't had a chance to dig into that. Looks like guidance was light and the stock's down about 25%. We just did chart day yesterday in the private community, Patreon, and Discord, and people were asking about should they buy, Cloudflare at $60 a share, and I told them, 35, 45, maybe something like that. Here we are at $45. So if you're not in our private community, consider joining that. You can go to patreon.com/firedupwealth. It's worth the investment, and I encourage you to check it out. So Snowflake at one point was up like 10%. Now it's up 3%. A lot of these are given back because of other earnings coming out. Intel didn't have a great earnings report. Datadog is up 7%. It's at $75. This is a pretty epic bounce that Datadog has had over the last couple of days. Cloudflare is at 47. It was at 45, so it's down about 21%. It was down about 25% last time I looked. Another big name here, Stripe announced a new global agreement to run virtually all their infrastructure on AWS. And there's tons of companies that already use AWS. We talk about Mercado Libre. Their entire business is fueled, it's operated, it's run on Amazon Web Services. Westpac, T-Mobile, Marvell. This is a semiconductor company. So selected AWS to rapidly scale its electronic design automation in the cloud to address increasingly complex chip design processes and deliver continuous innovation for expanding needs across automotive, carrier data center, and so on. So you got TELUS here, one of Canada's leading telecommunication providers, and so on. Lots of big news in AWS, always adding clients. Announced new AWS tools that make building with generative AI easy, practical, and cost-effective for organizations of all sizes. We talked about this recently on the channel. Amazon Bedrock, a new managed service that offers customers the easiest way to build and scale enterprise generative AI applications. If you want to learn more about this segment, please watch the video on the channel that's called AWS AI. I'll put a card at the end of this video. You can go watch at the end of this video. And in that video, we talk about all this, including Code Whisperer, and I go into a lot more detail. Received Zoox driverless testing permit for California Department of Motor Vehicles. This is huge. We think of robo-taxis. Expanded the Ring lineup for new devices. Ring Battery Doorbell Plus. So if you're familiar with Ring, when you go to someone's front door, Amazon acquired those guys several years ago. That's part of the Amazon family as well. Expanded Amazon built TV lineup with Fire TV series. I mean, this list, this goes on and on. Open Amazon Sidewalk. Developer testing for the first time the company's vision to put 1 billion Internet of Things devices into the network. Amazon Sidewalk is a low bandwidth, long range community network that connects devices across long distances. This is really cool stuff, and Amazon has their hands in so many different pots. I'll call these technology conglomerates when you think of these big companies like Google, Amazon, Microsoft, Apple, and so on. And for me, they're core of my portfolio, and I'm going to get to this in a minute here and talk about why people are flooding to these stocks right now. Reached 1 billion packages handled by Robin, robotic system used across Amazon's operations networks. If you don't follow Amazon closely, you might not even know what some of this stuff is. I've been a shareholder for many years, and I always listen to the calls and read through these, but it's good to cover some of this stuff, I think, in more detail on a video like this, just to give you more perspective of what's going on. They have their hands, again, in so many different pots. Okay, this is just real talk, unscripted, just unedited. I'm going to tell you what my thoughts are with Amazon and just really big cap tech in general. So you saw Google's earnings, the stock popped, it kind of faded, and then today it was up about 4 or 5%, and you saw the NASDAQ rip today over 2%. Now, if you look, small caps were getting hammered this morning, and the mega cap tech companies, the larger companies, they were rallying. And semiconductors overall have been going down as well, especially the smaller cap semiconductors. Now, what's happening here is people are starting to try to look past the recession, saying, okay, we might still go into recession, but we think these big cap tech companies, they can ride the storm a little bit better. The stocks have come down enough. Maybe we've seen the bottom, the worst of it, where they're starting to get into growth mode. They've cut so many different jobs. They're starting to work better into profitability. So we know that Amazon and that Google and that Microsoft, Apple's going to report next week. We'll see what they have to say. But those three in particular, people are putting money in those stocks. Number one, for AI. All three of those companies are working on AI, and that's all the buzz right now. But secondly, these companies have cash flow. They've got tons of cash on the balance sheet, and they're not going to go out of business. And that's the thing. So you look at like a smaller cap spec company that's going to need cash. It's more expensive for these companies to borrow cash. It's harder to get cash. If you're burning cash, you've got negative free cash flow, and you're going to need to borrow money anytime soon. Those kind of stocks are going to be thrown in the trash. You're going to put money into higher quality companies that you know are going to be there in 5 or 10 years. And that's really what's happening. You're looking at it and saying, okay, they've laid off a bunch of people. They've made all these cost cut improvement measures, and we're going to see the other side of this. And yeah, these stocks have run 20, 30%, so far this year, and they're off their lows. But if I look at a multi-year holding, I'm going to profit from it. Now, of course, most people that are investing in the stock market, they're not thinking about 3 years, they're thinking about 1 year. And so the market's trying to look forward and say, okay, is the Fed going to pause at some point this year? Maybe they don't cut, but maybe they pause. And maybe in 2024, we start cutting. And if I buy something like Amazon and hold it for 12 months, I'll probably make money. I think that's what's going on, especially with institutional investors. With that said, we're going into a season seasonally weak period right now. Sell in May and go away. I think you have to be careful chasing some of these names. I will show you a chart here on Amazon and give you some thoughts, but just in general, my thoughts about the market right now. We were buying pretty heavy in Fired Up Wealth in 2022. We bought some, through the year. We've been nibbling different stocks, but stocks like Amazon and Nvidia and those kind of names, we pretty much bought all those last year towards their lows, and we were buying them on the way down. We're not necessarily buying them now. We're looking for other opportunities. We're always trying to find things that aren't in fashion and go against the grain and buy the things that are out of fashion that are going to rip next. Something like Amazon that's already ripped 35%, can you make money on it? I think the answer is yes, but I think you have to be very cautious at the same time. So do I like Amazon long term? Absolutely, and I've owned it for a long time, and I plan on not selling this till 2030 or later. But you can see post-market right now, it's about $118 a share. That's this blue line here. And not long ago, this was trading at about $80 a share. In fact, this is early January of 2023. This was $81.43. So it's ripped from $81.43 to $118.11. And you have to ask yourself, do I want to pay that premium after it's run so hard, or should I have maybe bought it sooner? Now you're already past the R3. These are Fibonacci's. And you can see this orange down here are previous chart days. We do chart day every single Wednesday in Fired Up Wealth, Patreon Discord. You can join by checking out patreon.com/Fired Up Wealth. And we've been talking about 96 support. Watch for 104 on the upside. 93.50 support. Look for 96-100. These are older. So these are older ones that we've been talking about in the community. And you can see it's done that. And now we're at $118. The question you have, is it a buy now? I think if the market continues to go higher, there's going to be momentum with these names. But you have to ask yourself, with the macro situation, there's lots of macro risk right now. What's the risk reward if I'm buying a stock right here? So we're past all these Fibonacci's. The previous R3 is $121, and maybe you see it come up to that range. Maybe it even goes past that. You can see that it was $146 here back in August of 2022. So at some point this year, it probably gets up in this level. It's not going to happen overnight, and you could see some gyrations between here and there. I said early in the year, beginning of this year, I said we'd have a run up, we'd have a sell off, we'd trade sideways until the second half of 2023, and then you would probably see some follow through and a strong close the end of this year. Now, of course, that's going to be dependent on macro news, which I don't have a crystal ball to know for sure what happens, but assuming that the Fed starts to lay off and the economy starts to improve, you're going to see a rally towards the end of the year. But we have a lot of months between now and the end of the year. So I'm cautiously optimistic about the next bull market, but I won't be surprised if there's some volatility along the way, and if you don't see another sell-off or two between now and, say, September. So update, I told you earnings always keep us on our toes. As I was making that video, I was literally about to publish it on YouTube, and the stock turned the other direction from up 78% to down almost 2%. So the CFO said in the conference call, and I told you at the beginning of this, it's going to depend on what's said on the call. That's always the risk of doing these quick earnings reviews right when the numbers come out. But on that earnings call, said that AWS revenue growth has decelerated further in April. And of course, when you think of earnings are always lagging. So if you get earnings reported, it's from the three months previously. April revenue growth rates are 500 basis points lower than what we saw in Q1. So Amazon is now back to $108 a share. And earlier I was saying, don't buy it at $118, be patient. I like this stock. I especially like the stock below $100. So if you're thinking long-term, you can get this thing at $105, $110. DCA, that's dollar cost averaging. I think it's something you accumulate over time, but don't expect this stock to just make you 30% returns overnight. And we're heading into a seasonally weak period right now. So again, tread with caution. Just wanted to provide this quick update. Thanks for watching, guys. But we as investors, we like to buy things at the best prices and have it go up every single day. If you're new to the channel, make sure you subscribe, click the bell for notifications, drop me a like, drop me a comment, check out some other videos. Have a great rest of your day. Take care.